Welcome back to my final morning report chart appraisal of today, Monday the 15th of August, with me, Richard Perry, market analyst at Handtech Markets. Let's look at gold. And we've seen, I think, what probably could be described as a pretty disappointing trading session on Friday, considering we had that weak retail sales data. Initial gains on gold was sold into, and you could argue that in the last sort of few weeks this gold chart has become pretty sort of rangy, not really able to gain any real traction either way. Get a few days of run higher, but then it just drops away again. And again, this sort of attempted rally that we saw middle of last week basically has just hit the buffers again around 1357. So that is interesting, and you sort of see the momentum indicators. They are still bordering on the positive configured. Certainly the RSI holding above that sort of 50 level. MACD line still still above neutral, which is positive, but just falling away, which is slightly near-term negative. But the stochastics falling away is probably the concern that you would have with this. So maybe there is a sort of a prospect of another dip back towards the long-term breakout 1306. But for now, I think 1330 is a key level. You see here on the hourly chart, the last sort of couple of weeks, 1330 has become a really key support, tested on numerous occasions and held. Didn't quite get back there on Friday, 1333, or today yet, but certainly there is still, I think, the prospect of the fact that the hourly chart is again just dropping lower on these moving averages. It's a fairly choppy mixed near-term outlook. 1357, as I said, is the resistance. You sort of didn't quite make that before the selling pressure came back in on Friday, 1355 area. And I think, just generally speaking, I think perhaps you should start to think about possibly playing gold as a near-term play in terms of a trading move, because I think buying and holding across the course of maybe 2 or 3 days, maybe you're not going to get the profits out of that. So I think you need to just it is sort of my understanding that I think that at the moment gold is fairly choppy and not really seeing the traction in any real sort of trending moves. And perhaps it needs a catalyst to the upside to break this little sort of phase of trading that we see in gold, where it's sort of ranging between sort of that 1306 breakout and the 1375 level, because it is trading within that, and you do have the support, as I said, 1330. And as long as that's holding, you're fairly well set, I think, positively. But if that does break to the downside, you could see a retest of the 1310, 1306 mark. But for now, you're sort of holding on to a marginal sort of positive bias on the near-term basis. But those stochastics falling is a concern for me, and it's a bit of a choppy one. So just bear that in mind when you're trading gold. So I wish you good luck in your trading today, and I'll speak to you again tomorrow. Thank you.